someone says 500,000 Bitcoin, how? How? What does that look like? Think about that for a second. Just like a very simple check. What is the Bitcoin market cap at that level? There's about 20,000 Bitcoin every single day on the move. And if we assume that even some small fraction of that is sell side, then the market's absorbing billions of dollars every single day in sell side. So, the fact that we're still here is the signal. Bitcoin at $2 trillion to go to $3 trillion. The small guy who can't work out percentages, he's not the one who moves us to 3 trillion, right? Serious guys move us to $1 trillion. Plebs simply cannot stack more Bitcoin. They can't move us higher. Are the ETFs different to an exchange? Functionally, not at all. You put coins into this big bucket of a centralized entity and then you trade the asset inside it. Folks, stop looking at exchange balances. It's nonsense. It's bollocks. It's engagement farming. If you're getting those tweets, that person is either uninformed or using you for likes. Both of those two things, probably not a good sign.
Welcome to G'day Bitcoin with James Check, aka Checkmate from Check on Chain. The golden age of grift is upon us. Bitcoin strategic reserve, it's totally off track, and we're caught in a tight consolidation between about 95, 105K. I want to talk about the removal of SARB 121, a move to convert your Bitcoin into Fiat. We'll dive into that. We are going to dive into BlackRock filing for in-kind ETFs, Ross getting set free, which was absolutely epic. What does this all mean for Bitcoin's next move? There's about 2.3 million Bitcoins sitting on the exchanges. Record low liquidity. James has got something to say about this. Meme coins, they're fueling financial nihilism. We're diving deep into the metrics that matter and what's really driving the market. Hit subscribe if we vibe. It's Checkmate time. James, the golden age of grift. I heard you say that in the podcast with Marty Bent yesterday. What the hell does that mean? It feels very fitting, I think.
Yeah, g'day, mate. How you doing? Look around, right? Trump's launching meme coins, and we're in this very strange world where we've obviously seen this like financial nihilism. It's been a real theme, I think, and a very meaningful one. Sports bettings people are betting on the basic like shit coins of shit coins, meme coin season. It is a bit of a golden age of grift. I mean, the crypto world is really designed to grift. But you invite politicians into the mix, and you're going to get political results, right? And they're dirty buggers, and they're going to go out there and launch meme coins because it's profitable. And it's the other thing I think is really funny. Everyone's like, "Oh, Trump launched a meme coin." It's like, bro, Trump didn't launch a meme coin. A bunch of people sitting behind his account have launched a meme coin.
Yeah.
Trump doesn't have World Liberty Financial. It's a bunch of folks associated with Trump running World Liberty Financial. Like, come on. People are like, oh, Trump owns more ETH than Bitcoin. It's like, no, he doesn't. He wouldn't know what Ethereum is. He doesn't care. He's got bigger fish to fry. So, it's one of those things where we're just in this environment where the money is dying slowly but surely, gradually then suddenly. The money's dying. People feel like they can't get ahead. And the sad reality is they go out there and they gamble and they punt because it's like, I saw a post the other day. It was a poll. It was like, if you could click a button and there was a 50-50 chance to double or halve your net worth, would you click it? And if so, how many times would you click it? 50% of people said 0, like not interested. Yeah. And the other 50% are like 10 times or more. They're like, just keep hitting this button. Like, what if I hit a jackpot? And this is the kind of environment that we're in, right? People are struggling. Inflation's a pain. And, they're kind of behind on everything and they feel like they're not getting ahead. So they speculate on shit and then scammers come in and take advantage of it.
Yeah. With the conversation around the Bitcoin strategic reserve, and then it sort of changed to the crypto stockpile. As Bitcoiners and people that have been here for quite a while, James, we understand like the money is fundamentally broken. Bitcoin is that answer in a digital economy. It's the best store of value known to man, is created, engineered to be the best form of money. With the crypto that's come into the conversation now, like Bitcoiners have spent so long saying Bitcoin, not crypto, and really distinguishing the difference. Is that going to be a whole lot harder now, like for the next couple of years? And like I still think Bitcoin's the only answer for like the coming fiat collapse, like you're saying, slowly then suddenly. Do people just get confused and now there's like shiny object syndrome and they just totally get distracted?
Look, my view is, and there's kind of two angles to this. The first one is just on the Bitcoin reserve in general. I actually couldn't give a rat's ass about the BSR. I think Bitcoiners have become so intoxicated by this thing. I don't care. I don't think it's going to happen. I don't think it needs to happen. I don't think it should happen. I actually think that the whole, like the stockpile thing where they just hang on to the Bitcoin, fine. But actually, I just don't really think that we should be really that excited about this thing. I don't think it really
The
changes
government
anything.
holding
Like,
Bitcoin.
yeah, I mean, guys, come on. Like, what is going on here? So
Yeah.
for me personally, I couldn't give a rat's ass. There's obviously a lot of people who care about this thing, but like, let's just look at the incentive structure here. You've got the folks who are like, Sachs is in there as the crypto czar. He's a mad Solana fan and he owns all these shit coins. He's, VC tech bro. He's of course going to want to shill his coin. You've got Brad Garlinghouse who's decided to switch houses now that he lost. He bet on the Democrats. He's now switched over, and suddenly Ripple's in the news. Like, come on, guys, this is of course how it's going to happen. You've got misguided incentives. Did you honestly believe that you were going to say, "Hey, Mr. Government, we're going to vote you in. Can you please do what we said?" And then they're going to go and do what their incentives like, guys. Where's the adversarial thinking? What is going on here? Of course, you're going to get crypto coins in this whole mix. Again, I don't think any of it matters. Like, if I look at it from my perspective, I'm a Bitcoiner. I hold Bitcoin for all the reasons that we do, right? We can kind of see where the world is going. I kind of scale this thing up. Does it make sense for me as an individual? Yes, it does. Does it make sense for us as a company? Yeah, it does. To have Bitcoin in the balance sheet for that long-term time horizon. Does it therefore make sense for countries? Yeah, probably. Is it something that we should be saying like, oh, finally governments are going to buy our bags? Like, no, like this isn't something that we should be overly excited for. But the incentives, if you're a Russia or a Saudi Arabia or any of these countries that are kind of like on the edge of, US favoritism, then yeah, it makes the same amount of sense as gold does because it's a savings vehicle that you can hold that no one else can take away from you. So there's a lot of things that make sense. There's also a lot of things that don't make sense. But if you invite politicians into your life, don't be surprised when you get political results.
Really quickly, ladies and gentlemen, I've teamed up with the Bitcoin Way. This is the professional Bitcoin IT team. They can help you master your Bitcoin self-custody. Safetina Moose, the author of the Bitcoin Standard, also recommends this professional Bitcoin IT cybersecurity team. Their guys are absolutely amazing. They can help you set up a node, protect your stack, get your Bitcoin off the exchange. Make sure that you are following best practices. Number one, that it's air gapped. If you don't know what that means, I've put their details below for you. If you're worried about SIM swaps, reach out to the Bitcoin Way. Maybe you just want to know that you are doing the best thing. You're doing all the little tricks within your device to be able to make sure nobody can ever get into your Bitcoin, have any access. If you've got any queries about connecting to public USB and charging points, connecting to rogue Wi-Fi access points or malware-infected USB cables and flash drives, reach out to the Bitcoin cybersecurity team, the Bitcoin Way. Free 30-minute call. They are at the top of the description. Moving a little bit away from strategic Bitcoin reserve and stuff, well, I guess tying into that, the day Trump got elected, I was filming with Mark Moss, and the price was $67,000 US, and we're here like just over 2 months later, and we're sitting
crashing to 100,000.
Like, isn't it wild, man? Isn't that just crazy? And people are getting bearish. Yes, like we touched 98 or 99,000 the other day, and people like it's so over. But it feels like we've sort of been stuck between like 95 and 105K since really like breaking 100K. My most favorite word from you, James, is chopsolidation. And when we're at the 57K gang or the 58K gang for 7 months, it's just chopsolidation. Are we in another period of chopsolidation?
Yeah, of course. I mean, chopsolidation is the norm. And actually, chopsolidation is extremely healthy, right? The market goes up, sideways, up, sideways. This is a quiet and trending bull market. It's like we haven't even reached the kind of manic euphoria. Things just take time, right? Bitcoin gets bigger and bigger. I mean, I wrote a piece yesterday. A lot of people get caught up in the numbers, right? They don't really understand how big we are. And we're kind of in this interesting, like a middle ground where Bitcoin is simultaneously the biggest it's ever been. It's $2 trillion in market cap. It's an enormous beast. And yet at the same time, it's also insignificant relative to the global pool of capital. So it's like a very, very, it's the biggest fish by some margin in its pond, and it's a tiny fish in the broader spectrum. Now, you mentioned, I can't remember what, there was a point that you raised before that kind of highlighted, like, are people going to get confused with all these crypto coins and all that shit?
Yeah.
I did another study where I was looking at how big Bitcoin is relative to the competition, so to speak. Bitcoin on an intraday
There
basis,
is no
just
second best.
I know. So on an intraday basis, right? Obviously, the two kind of the headline names is Ethereum and Solana.
Yep.
Bitcoin's market cap moves intraday. Just the market cap moves an entire Solana market cap regularly. Like I
Wow.
literally plotted Solana's market cap and I plotted the intraday change in Bitcoin's market cap, and that chart just completely hid the Solana market cap because we're fluctuating
Wow.
by 75 to 150%. Bitcoin moves hundreds of billions of dollars a day in market cap size. Now, that's obviously not the traded volume, but it kind of shows you that, and there's this divergence of how much it moves relative to Ethereum. Way back in 2021, at the height of the 21 bull, it was moving about 5% of Ethereum's market cap every day. We're now moving 20% of its market cap. So Ethereum is losing ground relative to how
Wow.
it's just diverging, man. So Bitcoin is so much bigger than everything else. Everything else is just so irrelevant by comparison. So now we kind of flip over and say, well, how big is Bitcoin relative to the rest of the world? Well, in order to go up 50%, right, to go to 150K, which a lot of people I think is very, very plausible, and I think it's plausible as well, that's $1 trillion market cap move. That's $1 trillion. That's 1,000 millions. It's a very, very, very large number. So a lot of people kind of they don't realize that a 50% move now is not going to be the same as a 50% move back in 2017. The sheer size of this thing requires much, much more capital. So with all of that said, the fact that we're chopping around and doing this consolidation thing at $100,000 is unbelievable, right? We're absorbing, there's about 20,000 Bitcoin coming from old coins, right? 6 months plus, a year plus. There's about 20,000 Bitcoin every single day on the move. And if we assume that even some small fraction of that is sell side, then the market's absorbing billions of dollars every single day in sell side. So, the fact that we're still here is the signal, right? And everything else, by the way, the reason why I think sentiment is so wrecked is because if you look at the alt world, they are getting wrecked. So
Yeah.
I've been trying to work out this divergence between Bitcoin down, 1.2% and the market just panicking and terrified. And I'm like, what are you all soft? And then I actually started doing some numbers and trying to quantify this thing. Alts are getting absolutely hammered, right? Absolutely hammered. And the reason people's sentiment is so bad is, I think, two things. One, they don't hold enough Bitcoin. I think the market still to this day is underallocated to Bitcoin. And the other side of the equation is that the coins that they did hold, right, all the other shit coins, they didn't buy the right shit coin because it's been very much a stock pickers market. You have to be in the right Telegram group to catch the right meme, to catch it at the right time, and you got to sell. That's always the story, but it used to be like a rising tide lifts all boats where you could just throw money in, buy a shitcoin, and the shitcoin would go up.
Yeah.
It's not like that this time. You got to be these people have to be really selective. So as a result, people are buying, they don't have enough Bitcoin. They buy too much of the wrong shit. And of the shit that they do buy, it's not the one that pumps. So there's just a lot of people who are getting wrecked because they aren't keeping it simple, staying humble, and just stacking sats.
Yeah, it's really not hard, but do you reckon the unit bias comes into it a little bit, like with Bitcoin being at 100,000 or thereabouts? So people just think, oh, I've missed the boat and I can get a gazillion XRP for $10 or whatever it is. I have no idea what XRP is worth.
Look, unit bias is a thing, but unit bias is a thing for people who are not sophisticated. Right. So Bitcoin is now, and again, Bitcoin at $2 trillion to go to 3 trillion. The small guy who can't work out percentages, he's not the one who moves us to 3 trillion, right? Serious guys move us to $1 trillion. So in a way, Bitcoin is also diverging on that front. And if you look at, pleb balances, less than one Bitcoin, they've been flat for more than 18 months now, and they're actually declining at the moment because plebs simply cannot stack more Bitcoin. They can't. They can't move us higher. So it doesn't mean it's not important, right? You've still got those plebs continuing to buy, but the truth is, to get us up $1 trillion, the humble DCA hodler isn't going to get there. It is the size of capital that needs to come in. And by the way, we have this. We're seeing $500 million days into the ETFs every day, and a decent chunk of that, by the way, is going to be retirement funds. Bitcoiners who finally got access with their retirement to say, hey, I'm going to buy these ETFs as well. There's a very large chunk of that happening. So there's kind of this like latent money that they've wanted to invest. I've done this myself. I've wanted to get my retirement income and actually allocate to Bitcoin. And the thing that sells me immediately is like, okay, Bitcoin is 16 years old. I won't need or be able to access that retirement money for like 35 years. Where the hell is Bitcoin going to be in 35 years? I know it's not going to be 100K, right? It's going to be substantially higher than that. So for me, I'm like, well, there's my long-term savings plan. So there's a lot of that money. But that, of course, your whole retirement, that's serious money. That's not, the occasional $10 daily DCA. We're talking about meaningful capital. So serious people, I don't think, are deterred by the unit bias. Unit bias is also kind of solved by the ETFs too, because people can buy an $85 stock rather than buying a $100,000 Bitcoin. So I think unit bias is kind of being solved in many ways. But, yes, the dumb money will go down and buy 60,000 fart coins because they can do that with $10. But I don't think that's a serious market, right? And that's why they're not performing.
Yeah. Which is sad because they're the people that really need sound money the most. And
correct. That's ironic, isn't it?
Yeah. And like we're both here in Australia, catch up with friends, family and stuff. And they're like, oh, did you catch the game? They'll pull out their sports bet accounts and stuff. And you're like, you're struggling and you're gambling. Can you just start allocating a little bit? Even if that $10 a week isn't going to move the Bitcoin market cap, it's going to move their life substantially over time. Yeah, it's sad. I just want to talk about something you touched on, which is the retirement funds. I've done that here as well. So in Australia, for everyone watching, superannuation is similar. What would it be to like the Roth IRA?
401k.
Yeah. Type plan. And you can buy Bitcoin through a centralized exchange and then you can move it into self-custody so you can protect it. You can hold Bitcoin as the bearer asset. It is, obviously, there are restrictions. Like you can sell it, you can move it, you can trade it, you can do whatever you want to do with it to be able to increase your retirement position, but you can't use it personally to be able to go out and spend or something. So I think that, such a pertinent point is there are options. Yes, Bitcoin's at like $100,000. Here in Australia, it took me probably 6 to 8 weeks to get my self-managed super fund set up. Known people that have had it done in a couple of weeks, other people a little bit longer. But what was that process like for you, James? And do you think it's something that people should look into doing? Because it's like another pool of capital just sitting there. And what are your thoughts if they don't hold Bitcoin in their super and they just leave it in super? Do you think that's a safe idea or a good idea?
Yeah, so it is an interesting one. So I actually went with, because basically I've been buying and self-custodying Bitcoin for years now. And I do think there is merit here for people understanding, like there is also a benefit to these ETFs. So for the approach that I went for, there's a company here in Australia, a broker called Hello Stake. Don't get confused with Stake, the crypto gambling company. Their onboarding flow was fantastic. It was literally like, fill in your forms. They do all the company paperwork and all that stuff and then roll over your super from your previous provider. Really, really clean, to be perfectly honest. And I just allocate to the ETFs. And for me, that's actually a diversification of my custody, right? I don't have to worry about all of the obligations and making sure that those coins are safely held. Like if the worst were to happen and I was ever to lose self-custody for whatever reason, or probably even more importantly, if I just cark it and don't come home one day, right? There's always a risk that your coins can go missing because your loved ones just they fuck it up, right? The ETFs, it's kind of hard to do that, right? They're just held within a brokerage account. So for me personally, that was the right kind of balance and mix because I've now got a diversified custody setup. So it's never going to be a single point of failure. So that was the way that I looked at it. It was a really clean onboarding process. So I think that's for me, that was the solution that I went for.
Yep. So that was called Hello Stake.
Hello Stake. So the company's called Stake, but go to Hello Stake, type that into Google. If you just type Stake, you'll get that fucking crypto gambling site called Stake, and you don't want to end up there.
No, definitely not. For myself, I use D-Super Fund as well. So there are a couple out there, and talk to your financial advisor. Definitely not financial advice, but well worth looking into. I had so little in my super fund and it wasn't going anywhere. And with Bitcoin, it's just time. And
the hardest thing was getting the my existing super fund to do their legal obligation and send my goddamn money across to my self-managed super. The amount of red tape they
100%.
put up. Oh, sorry, the date was different on this thing. Oh no, this. Oh yeah, sorry, we did. Like, guys, and I just called them out. Send it now. It's over. Finished.
Yeah.
Legally, you have to respond to this. You have to send. And they put up such a fight. And eventually, you're just like, look, I'm going to the ombudsman. You send it right now. Done. It
Yeah.
was done the next day.
Yeah, it feels, and it's hard to say, but it feels like the super system is worse than the banking systems trying to get money to be able to put into Bitcoin in whatever way possible. Like, adding on to this conversation, so here in Australia, there are some like ETFs, the monochrome ETF, IBTC, where it's in-kind redemption. So you can buy Bitcoin, you can pay them a fee, and you can move that Bitcoin into self-custody in a trust under the same name. Definitely talk to an accountant. I hold Bitcoin in self-custody, not through the ETF. But BlackRock's filed now for in-kind ETFs. It looks like the CBOE was it as well. Did it yesterday. But like the conversation around in-kind versus cash creates is starting to come back into play again. Like, is this a big deal?
Yeah, so the way to think about this, so monochrome actually allows individual investors to do a deposit and withdrawal. That's not going to be the case initially for the ETFs in the US, but basically it's cash creation redemption now. So basically there's a cash transfer to buy the Bitcoin. They can't send the Bitcoin in kind. That I believe is going to change. Now that's going to fix market structure. It's going to make the whole thing more efficient. It's going to, just take away friction of all that, multiple transfers and from Bitcoin to cash and vice versa. So it's actually going to be more beneficial for the ETF market structure. It lays the groundwork that eventually you might be able to do individuals withdrawing and doing in kind. But for now, it's just going to be the authorized participants who are basically the ones who make the markets and keep that market structure moving. It's just an efficiency. Right. And at the end of the day, markets want to find efficiency. And that's how the rest of the ETFs work as well. So this was kind of a strange thing that the SEC put in, that only for the Bitcoin ETFs can you not do in kind. It's kind of just a normalization back to the efficient means that it should be.
Yeah. What are your thoughts on Gary Gensler going? Was he good or bad? He's a pretty interesting cat, hey?
Yeah. So here's the great irony, right? When you look around, a lot of people will be like, hey, could you come back? Because like the golden age of grift seems to have exploded since he's left. But look, let's not kid ourselves here. At the very highest level, he was obviously a shill for Elizabeth Warren and her goons, right? That was kind of the thing. So look, was it kind of a whole corrupt, sketchy, questionable process by and large? Yes, of course. So are you better off not having people who are kind of in that ballpark? Yeah, probably. What's the trade-off? You get Fartcoin that moons through the roof and, Ripple suddenly isn't a security. Like, there's all these things. It's like, I mean, sometimes you wish, like, just can we get back to common sense? But at the end of the day, you got to fix the money before common sense comes back, in my view. Yeah. So it's going to take a long time. It's going to be a painful process, but, you just stack sats and chill.
So, like the conversation has been very political with Bitcoin for a while, Trump running along like this pro-Bitcoin crypto platform. And that aside, strategic Bitcoin reserve or not, I definitely think I'm with you. It's better if the government, especially the US government, doesn't hold an extraordinary amount of Bitcoin, gives just like the everyday citizen an opportunity to be able to stack sats, which I think is like the most important. But he kept this one promise that the Bitcoin community have respected him so much for, and that was freeing Ross on day one. It's like everything else, if it happens or it doesn't happen, it's just sort of like icing on the cake or like gravy now. It's like all that mattered, really, wasn't it?
Yeah, that was the only thing, and I was like, yeah, good. That was a promise kept. Everything else is whatever. SARB 121 is also good, but that was just common sense again. So, freeing Ross was a true presidential pardon, and it was a full pardon too. So I think that in many ways, that was the win, right? That's really what I think, at least for me, that was the only thing that I really cared about. Everything else is just kind of, you've got a less strictly hostile regulatory environment. That's good. Thumbs up.
Yeah, I like that. And what was that China AI bot that came out yesterday? DeepSeek, I think.
Yes.
Well, it came out over the weekend, and the markets really panicked. Like with that, Trump's like running on this AI crypto sort of rhetoric at the moment. Have they just annihilated that out of the conversation by launching this DeepSeek or like the
No,
AI
of course not.
industry? Or
No, look, I think the thing with AI, and again, I don't have any edge in this stuff, right, in terms of like picking stocks and all that stuff, but the general framework here is that Nvidia basically sells, they're like, the poster child for the AI revolution. They sell all the chips that run these things, and their biggest clients are the big tech companies. So it's all this kind of like incestual money where there's kind of trade, Apple's buying things off Nvidia, and they're all this kind of this big pool of like AI innovation. Now, what DeepSeek is as far as I'm aware, and again, I'm not an expert on this, it's basically an open source model that was developed by China or a Chinese company. And they've basically gone about the problem in an interesting way. So rather than these massive LLMs where they've got all these trillions of parameters and they're all, it's kind of like one big behemoth, what they basically did is they simplified it. They said, well, if you're asking a particular style of question, you only actually need to engage this part of the expertise, so to speak, of the AI. So they basically found a bunch of ways to be more efficient. It's more efficient to build and actually compute the LLM, by like an order of magnitude in terms of cost or multiple orders of magnitude. It's cheaper to run inferences and actually query these things. So in many ways, it's just a net improvement in the way the architecture works. Now, what's going to happen here is a bunch of US companies are now going to look at that, unpick it because it's open source. They're going to find the bits that really work, and then we just get the whole market moving forward. But the reason that the market's sold off is they're basically saying, well, if this thing is more efficient, then we don't need all the chips that we've already bought. So in a way, a sale is going to slow down moving forward because if suddenly the AI takes 5% as much compute power, well, we've already mass built for the ones that used 100%. So therefore, we can actually scale this thing up before we're going to need to buy more chips.
Yeah.
So that was kind of the concern. But then, the Jevons paradox comes in, which is one of these, funky paradoxes you've got to get your head around. And the idea is that, well, if it suddenly is more efficient, we're probably not actually going to use less of it. We're actually going to use more of it. If suddenly it's cheaper to use AI and you can do it for more things, people are going to find more things to plug it into, right? So if you generate more electricity, we're going to find more shit to use the electricity for, right? If you've got infinite energy, you can do infinite stuff. So it's the same concept here. So I think that, again, I have no edge when it comes to tech stocks and the like. My core thesis is 2025 is going to be a choppy, difficult year. I still think it's going to be positive. I'm on net generally positive, but I just don't think it's going to be a smooth sailing. The world's going through a lot of changes. Stock market is very, very richly priced. Everything's kind of correlated to equities. And look, Bitcoin and gold may break that correlation. There's a whole bunch of things going on. Strong dollar, yields are selling off. There's a lot of macro elements that just, to me, signals this is not going to be the cleanest, smoothest sailing. So I know I've encountered a lot of people, and they may be absolutely right. I got no idea. I don't know what the future holds. But I've seen a lot of conversations and a lot of people who are generally saying that, it's going to be a post-halving year and we're going to go up 100x and it's going to be fantastic. It's just going to be a parabola and, I'm just going to retire and sell everything in November and I'll be happy. I don't think it's going to be that easy, guys. I think it's going to be all over the place. I think holding biases on what should happen, this is just a general tip for markets. Try not to let your expectations of what should happen interfere with what is actually happening. Right? It's very easy for people to look at their expectations and say, well, I think this is going to happen, so therefore it has to happen. Absolutely not. And in fact, that's how you end up on the wrong side of the boat, is the market starts to go against you and you say, it's just a pullback before this thing happens. Just be really aware that our human bias is always present and you've got to try and constrain it and just say, well, use the information that's available to you. You've got to always critically think about this stuff. You cannot apply and just say, well, it's a post-halving year, so therefore it's going to look just like 2017 or it's going to look just like 2021. It's not. It's going to be different. It's going to be its own beast. It's going to evolve the way it evolves, and you've got to just stay on your toes because things simply aren't going to be the same. They are the same. They're also different. Just because they're different doesn't mean it's not going to be the same. Like, markets are dynamic. Keep that in mind at all times. Don't allow your expectations to cloud what is actually happening.
Adding on to that, one thing that I really appreciate about you and your messaging, James, is you always talk about like having a plan beforehand. So like choosing what you do in a positive situation or a negative situation now. So when that happens, you don't need to think about it. You don't need to fight your emotions for it. I guess, like, I'm pretty interested and intrigued. Do you have like a plan to the upside and the downside at the moment, or are you waiting for the market to continue to step forward before you create that plan, or what's your approach and what's that look like?
No, absolutely. I've got plans for both directions. So on the upside, there's kind of two levels, both on the upside and the downside, that are of critical importance. On the upside, 120K, and again, these are moving targets. As more demand comes in and more people absorb supply, these things shift around. But just if we were to teleport tomorrow, 120K is the level where the average Bitcoiner is, statistically speaking, very, very profitable. And we usually start to see them really ramping up their sell side. So 120 is like the level where we can expect there will probably be some significant sell side. At 150K, just about every model that I have is going to be lit up like a Christmas tree, right? Everything is going to be saying overheated to all sin. And no one's going to believe it. No one's going to believe it. And by the way, we can keep going. That doesn't mean the top is going to happen. Too many people get fixated on the top. What is the top? Which top? There's so many tops, right? There was a top 20 minutes ago, right? There was also a top 5 years ago. There's which top? So understand what top matters for you. If you're a retiree, it's going to be different to someone who's stacking sats. It's going to be different to a futures trader. What top are you talking about? Work it out. So for me, right, and I separate, there's two sides to me, right? There's check the analyst and check the hodler. Check the analyst's job is to be objective and as accurate as I can be without any bias. If we get to 150K, check the analyst simply cannot say we're going to 200 tomorrow. I just can't do it, because it would mean that we are beyond, like, there's like less than 4% of all trading days in history where those metrics would be more stretched. 4% is not zero, by the way. It does go higher.
Yeah.
But 4% of the time, 96% of the time, it goes lower. So the odds from check the analyst perspective is 150K is not going to be easy to crack. We will crack it eventually, but the question is when. So that's my upside plan. So for me, right, my actual price where it like changes my life and I'm going to go and do stuff with my Bitcoin, it's much higher than 150. So for me, I'm just going to not buy at 150. That's my plan. I'm just going to not buy up there because I'm pretty sure it's going to go down at that point. So I'm just not going to buy. On the downside, right, from where we are at the moment, 90K, so we're at 101 or 100 right now. 90K is the short-term holder cost basis. That's a level where the average guy, right, who's recently bought, that's their average cost basis. We often retest that level in bull markets, and we often actually trade below it. It's usually a sat stacking opportunity, but 90K is also sitting on top of what I call an air pocket. Below 86 to 73, we just teleported straight through it. There was no coins changing hands down there. We actually don't know what the supply and demand balance is in that zone. So markets often have this way of testing maximum pain. If you're listening to this, again, the way I plan these things, I have no idea what the future holds. It could be both of these things. It could be neither of them. I don't know. But I want to have thought about the plan before it happens so I know what I'm going to do. If we trade below about 86K, the market can just zip straight through that. We could go back down and retest that chop consolidation range from last year. That is a possibility. It doesn't mean it's going to happen, but it's something that if that happens, just imagine the sentiment in the room. We go down 5% at the moment. Well, this is the thing, right? So if we go down 5%, the market's panicking at the moment. Yeah. What happens if we go down 30% and we get back down to 75K and we completely reverse the Trump pump? People are going to shit themselves. They're going to know what to do. I'm going to know what to do because I've made my plan and I've thought about this as a possibility in advance. I'm going to be stacking sats and I've got my levels as I go through there where I think we're going to start finding some value. But the idea is I've made that decision today. If I don't need it and we just go to 200K, that's fantastic. That's great. I went through a thought exercise. I considered what happens to the downside. At some point in the future, the downside will happen. So I'll pull that plan out and say, well, how does it apply to today's market? Can I reuse that same logic and just move the levels and try to find out where the next phase is? If I need the plan, excellent. I've thought about it. If I don't need the plan, who cares? I just come back and use it later on.
Yeah, I absolutely love it. I got a question yesterday on X from one of the community members, and they wanted me to ask you, are you still stacking, and if not, at what levels? So like currently around $100,000, you said 150, probably not ideal for you with your plan to be able to stack, but around 120, is it still a good idea for you in your situation?
Yeah, so I am still stacking. I mean, at the end of the day, right, I'm saving for that longer term. I told you that my price is much higher, so I obviously
Yeah.
believe it's going to go higher eventually. What I don't like to do is buy at 109K. I like buying at 90 because it's down from 100K. So the idea is like I just don't like to buy when people are taking a lot of profit. There's lots of old coins that are being sold. Futures funding rates are really high. I don't buy in those environments because every time I have, it's gone lower, right? Doesn't mean it's a bear market, but it means it goes lower. So I just think about it from this perspective, right? Let's imagine that scenario I described before, it's just going to happen. Nothing any of us can do can stop this. At some point in mid-year, we're going to go to 73K. Just imagine this is going to happen. It's destiny. Would you rather buy your coins at 100 and 105 or 109 or 120 and then it goes to 73? Or would you rather buy it 90 and 85 and whatever and then it goes to 73? Of course, right? If
Yeah.
you can improve your stacking by 15%, and there's always a risk, by the way. This is the thing that markets you've got to hold multiple views at the same time. What if it just keeps going higher? If it just keeps going higher, just DCA. You've got to work out what strategy works for you.
Yeah.
For me, I've been in this space for such a long time, right? I've got my hodl stack for the most part. But at the same time, I still want to save money because otherwise it just gets inflated to zero and Bitcoin is
Yeah.
the best asset for it. But I have the luxury of being able to say, well, I spend a lot of time thinking about this market. And if I think it's going to go lower and I can get 15% more just by being patient and not buying into the FOMO, you run that experiment over your whole stacking career. If you can get two out of every three stacks, you're buying 15% cheaper, and the other one you buy 5% higher than where the price was, a week ago. Compound that over your whole stacking journey. Suddenly, you've got way more Bitcoin just because you didn't buy before a 10% red candle, which always happens. We've all done it, and it will continue to happen. And even if it goes lower, I don't care because I know it's going much higher eventually. But I'd rather buy at 90 than at 109, right? Because it's obviously better.
Yeah. I guess for me, I keep things pretty basic and I just DCA or lump sum. Definitely prefer the red days, but you've got like a whole suite of tools. You've got a website, checkonchain.com. Did I get that right? Checkonchain.com. Definitely go and check that out. Like you've got a couple of charts and things at the moment. I think last time we were talking, one of your favorite ones was MVRV, if I've got that correct. What else are you sort of like looking at and interested in at the moment?
Yeah, so there's basically three tools that are just super, super powerful and super useful. One's MVRV, which is the unrealized profit or loss. Show me how in profit everyone is. And it's really simple. When everyone's having a really good time and their portfolios are really green, what do you think's happening? They're taking profit, right?
Yeah.
So what puts tops in? A top, the top, A top, whatever it is, it's sell side. So when do people sell? When they're really profitable. When's the other time that people sell? When they're terrified, right? So when MVRV is too high, I don't buy because it means there's a bunch of people who are selling. And I can use another metric called SOAP, which is like a sister metric. MVRV shows me the unrealized profit or loss. SOAP shows me the realized profit or loss. Who's hodling? Who's selling, right? And I compare those two. And when the average guy is really profitable and the average guy is taking large profits and the funding rates are usually pretty high, hands off. I'm just going to sit back and wait. It's not a good time to buy because it just goes down. It always goes down, right? When you get to those environments, it may go up first, but it's probably going to come back down. So you just look for those overheated conditions, and I just take a back seat and I just wait. The flip side is that those people who didn't listen to step one, they do buy at 109K, and then the market trades down to 90 and they panic. Their cost basis goes underwater and they start to sell at a loss and they go, oh, don't worry, it's at 90, but if I sell now, I'll buy back at 70. No, you're selling to me and it's probably going to go higher from there because I'm just waiting for those red moments when people panic. And you just flip the script. If you're a DCA hodler, rather than buying high, think about buying high and selling low, but like without the selling part, you're just buying low. You're just buying low all the time. And it's not low as in like 20K. It's low as in lower than where we were 2 weeks ago when all the dumb money was buying into the FOMO. And this is normal. Human beings are so emotionally driven in markets. They always buy the top and they always capitulate the bottom. I'm just looking to reverse it. So rather than being the guy buying high, I try to buy low. Sometimes it works, right? Most of the time it works. Sometimes it doesn't, but that's fine because on average, it's substantially better.
Yeah. And you also have a newsletter where you share your thoughts and some of your models as well. Where's the best place for people to be able to gain access to that? Because you just released it yesterday,
Yeah, so the
your
newsletter,
latest.
yeah, I do two a week. So general feedback is it's just enough, right? A lot of people are like, it's about 80% of what I could consume in a week, which is fantastic. They're like, it's just enough to challenge me, but it's not daily posts. Daily posts, a lot of people find is too much. So we do two a week, and they're a combination. A lot of the time, it's like a market update, my just general view, what's going on with the ETFs, what's going on with spot, on chain, derivatives, the whole lot, whatever happens to be important in my view at the time. And then I probably do about 30% of them or more. I would call them research pieces, helping people think about the market. So the one I did yesterday was just exploring what does it mean that Bitcoin's now a $2 trillion asset? And what will it take in terms of capital flows to get us to 3 trillion? I've written another one about why I called, it was one of my favorite pieces actually that I wrote called Paper Bitcoin. Everyone talks about paper Bitcoin and people suppressing the price with futures and options. I wrote a piece being like, well, guys, in case you didn't realize, unless if you're a big money manager, you want to buy $100 million of Bitcoin, you need to be able to hedge $100 million worth of risk. If you can't hedge the risk, you can't buy the Bitcoin. So we actually need derivatives to go higher. They have to be much bigger. They have to develop and they have to be extremely liquid because otherwise the big money can't come in the first place. So those types of dynamics is I just help try to, at least from my perspective, help people understand what the hell is going on because it's confusing. And there's narratives on Twitter. And one of my favorite sayings is, I love seeing the narratives on Twitter not playing out in the data because it happens all the time. Everyone gets caught up in the FOMO and the story. And then you look at the data and it's just crystal clear that they're wrong. And therefore you can go, well, if everyone's really hyped about this one thing, but there's kind of no follow through, I'm going to take a step back. I expect the market to let some steam out and then I will step in and take some opportunity, right? That's the way that I like to think about it. If you can just wrap your head around why the market moves the way it does. And again, I don't know the answers, but I'm trying my best to at least use all the data points that I have to piece together what's going on. Just help people kind of have this frame of reference that is grounded in reality, not in narrative.
I'll make sure I link it below for everyone to be able to check out. And you do have some older videos on YouTube and stuff. Last time, I think you just put out a recent video, but you weren't doing it as consistently. Are you doing your YouTube videos as much anymore?
Yeah, so basically the way that I went about it, so that the challenge that I have is when I sit down to make a piece, I generally put 110% of the effort in. And what I
Yeah,
found is that every time I did free content, I was really, really disappointed with people just don't actually, they don't value it. And it's kind
yeah,
of funny when you do too much free content, there's 1,001 newsletters people can sign up to and get free shit all the time. And just ask yourself, how many of them do you open? The feedback that I get from my subs, and I'm a big fan, both me and Alec, my co-founder, we're big fans of feedback. And the feedback that I get consistently is that people say, hey, it is affordably priced. And because I pay for it, I actually pay attention to it.
yeah.
And that actually makes it more valuable. So I just went down the path saying, you know what, I'm actually sick of doing free content because I did free content for years at Glass. I've done free content for years. And eventually I realized, you know what, my time and expertise is worthwhile. So the charts are free. All the charts you can see, you can go and access all the data. But my time and expertise analyzing it, that's what I charge money for. And that's, at the end of the day, you have to value, if you don't value your time, don't expect anybody else to value it. And that's the way that I think about things.
100%.
And I think Bitcoiners understand this, right? Because
Yeah.
at the end of the day, my job, whatever the price tag I put on that newsletter, it is my job to make sure that it feels really, really cheap to the people who actually pay for it. And that's generally speaking what a lot of people say is that like it's high value for what I charge for it.
Yeah, that's when I was younger and I guess broke, like to put it bluntly, I had that like mentality that everything should be free or handed to me or whatever. But even if it was, say like there's when I was, I don't know, 16, 17, I went to like a high level conference weekend, sort of like a mastermind thing, but I got a free spot and other people were paying like 8 to 10 grand to be there for the weekend. I went there and nothing in my life changed. There's no like seismic shift or whatever. And the people that went there, same content, same information, sitting right next to me, because they'd invested that $8,000 to $10,000, they were like really, really paying attention and like dramatically took some takeaways that were like really profoundly shifted their life. And what I've then found now is like with what you're doing, to pay a little bit of money for like to save me time, but for your time as well. It honors both things. And you've got like all this expertise where you've grabbed it and it's like razor sharp, or like you've really like focused in. So someone can pay like a little bit of money, they can get all that information, save their time, they can like catch up and get on with their day, or do whatever it is because you've got the skill set. And I think it's always worth.
If you get medical advice from somebody who doesn't charge you anything, and they say, "Oh no, I didn't find anything." Yeah, exactly. You're like, I might want to go get a second opinion.
Yeah, that like saying time is money. Like broke people swap their time for money, whereas wealthy people are always swapping their money for more time. And like that's a journey that we're going through with our company, my wife and I, at the moment. And especially like with AI and external staff and things like that, just really trying to buy back our time. Bringing AI back into the conversation, do you use AI for anything, whether it's like polishing up emails or looking at charts?
I don't use AI for anything to do with words. I'm a big advocate for AI will never be creative, not in the same way that human beings can. And my analysis and the way that I write, people don't pay me for an AI article. They pay me for my time thinking about, and when I'm writing, I'm thinking. That's how I actually do my best thinking. I construct the piece. I've got the charts. I mark them all up. That's where I formulate the idea, and I kind of get the market structure in my head. And then often I write the piece in just one go. It's just one run through where a lot of it is just like my freedom of thought. And I think that's what a lot of people resonate with. So I don't use it for anything to do with the writing, not even typos, all that kind of stuff. What I do use it for is when I'm building up charts and things. GitHub's got this thing called Copilot, which is quite good, and it takes away all the menial tasks. So let's say I've like developed I've got my own charting suite that I've kind of built out, and I'll say, hey, I just need you to go through and comment all these things, and just so I can see which chart, which trace goes to which thing, number them, or can you replicate this, or I want to do this particular formula. This is the intended result. What would you do? And then it like prints out the chart. So it saves me going to Google and doing a search for it. So, and then obviously I learn stuff as well, where I'm like, oh, that's an interesting way to have done that. I wouldn't have thought of that method. And then slowly but surely it kind of builds your muscle memory. So I use it for the coding side of things, but that's about it.
Yeah. I was building like our website last year, sort of no website, and we needed to integrate a learning management system. Very complex, or at least for me is very complex, like no knowledge. And before AI, I reckon it would have taken me 2.5 years to be able to learn and do all those skills. And within like 2.5 months, just sitting there with AI day in, day out is just incredible. And like custom CSS code and things like that, or just a far superior search engine. It'd just get the answer, or even if the answer wasn't quite right, I could just try it quicker and I could just get through faster. I think it's a major accelerant. For sure. And I do believe that Bitcoin over time is going to be the currency for AI. I don't know if you've got any thoughts about that, or are they going to use like stable coins, or how do you see it?
Yeah, I don't know, right? Because there's a lot of talk of these AI agents at the moment. I'm not at the point where I could give an AI agent access to my Bitcoin wallet. Like that's probably just not happening. I don't know. Like maybe I'm not that bullish actually on those things, because like I've been hearing about forever. Like back in my time as an engineer, there was always talk of like smart cities and blah blah blah. And the idea is like, oh, your fridge is going to order your milk for you when that happens. I'm like, I'm okay to actually just walk to the shop. Like I don't. For me personally, I don't really need that stuff. I can see it for things like a personal assistant maybe goes and like books flights, or just organize this trip for me. Yeah, there's probably going to be bits and pieces there, but for me, part of life is the journey of doing these things. So like, I kind of like going for a walk to the shop. I don't really want the dude to deliver my milk. I kind of want to go down, listen to a podcast and just pick it up myself. It's part of my routine and part of my day. I like it.
Yeah, interesting. Me, on the other hand, I'd much prefer like we get click and collect, and the quicker I can streamline groceries, in particular. Man, I hate the shops.
I do too, but
Can't
I like
stand.
walking around and like working out what I want to cook for dinner. So I don't know what I'm going in for, and I just kind of see what's around, and that's what gives me the inspiration on what I want to make that day.
Yeah, no, fair enough. I get excited to go to the butchers. I go there once or twice a week and pack it for the week. So, yeah, like flipping gears and keeping the conversation Bitcoin focused. You've mentioned like quite consistently about like the coins on exchanges being at all-time lows. It's been at all-time lows for the whole time that you've been in the space. It's sort of set around that 2.3 million, but like we're always getting tweets all the time. Exchanges, all-time lows, and everyone's waiting for that like slowly then suddenly pump where the exchanges are just have zero coins, there's no supply, and we get this like mother candle, the God candle.
Mega candle, as they say.
The mega candle. Yeah, we've already had the God candles. But yeah, like what are your thoughts about the exchange balance? Does it even matter? Is it part of the conversation, or it's just something to laugh about?
It's part of the conversation, but does it matter? Absolutely not. So if you are listening to this, every time you see someone talk about exchange balances and they're saying it's declining, delete, unfollow, block, mute, whatever the button you have to push, zero signal. And the reason for this, and strangely enough, literally before I jumped on this call, I'm currently reviewing the Glassnode report that's going to be coming out probably in the next 6 hours or so. And that basically looks at this exact problem. And what you will find, as you mentioned before, for my whole career in this space, and I've been looking at on-chain data for 6, almost 7 years now, exchange balances have forever and perpetually been about 2.3 million Bitcoin, always, and it's always back to some level in 2018. How is it that exchange balances can continue to decline and yet they're always at the same level and they're always relative to the same level? Because these data providers, they have to go and they're always finding new wallets. Like, oh, look, there's a new Binance wallet. Hey, look, there's a new exchange. Oh, look, here's a new exchange we're implementing. Oh, look, there's a cold wallet that we didn't know about that we found. So what happens is they back update, because basically they're saying, well, that cold wallet, we just found it, but holy shit, it's been around since 2019. So let's go and retrofit the data. So suddenly every drain is actually just coins moving to another exchange wallet, and the balances never change. You also have this dynamic where when the market goes up, people sell. So yes, there's this supply shock, and then there's a demand shock, and then there's a supply shock, and then people like you get these environments where people then sell, and that puts coins back on exchanges. So there's this dynamic. But the report I was looking at just before, it basically looks at exchange balances, and what Glassnode does, and credit to them, they include the coins that Coinbase custody holds. So whenever people are looking at other data providers, what they're not seeing, they're seeing the Coinbase exchange, but they're not seeing Coinbase custody. And Coinbase custody is as big as the exchange. So all of this decline is accounted for by the coins just going into the ETFs. And I would challenge people to say, are the ETFs different to an exchange? Functionally, not at all. You put coins into this big bucket of a centralized entity, and then you trade the asset inside it, right? When you put Bitcoin into Binance, you're now trading Binance Bitcoin because they hold the keys. When you put coins into FBTC or IBIT, you're now trading IBIT and FBTC, which is tokenized Bitcoin. That's all it is. Same thing. So when you look at the exchanges and you include the ETFs and you include Coinbase custody, exchange balances have been flat for like 3 years. They haven't gone anywhere. They've just moved into a different exchange wallet that happens to have a token called IBIT or FBTC. So folks, stop looking at exchange balances. It's nonsense. It's bollocks. It's engagement farming. If you're getting those tweets, that person is either uninformed or using you for likes. Both of those two things, probably not a good sign.
Yeah, hit the mute button on it. I'll be doing that. I was it's funny, and then also like the other tweet that's very, very popular is like whale alert when they come out. Like whales are buying or whales are selling. It's just
people love it. Noise. Don't whale watch, kids. Whale, it is just noise. Every time you see a whale, right? And this is the problem. It is really, really really hard to maintain labels accurately. Wallets are always changing. Is it a whale or is it an exchange? And think about this, right? People are talking about Mr. 100. I forget what exchange it actually is, but SaniEx has done a lot of work tracking this.
Yeah.
Mr. 100 is actually an exchange. So now think about your interpretation. Oh, look, Mr. 100 is buying 100 Bitcoin a day. What that actually means is people are depositing 100 Bitcoin a day. So it's not buy side, it's sell side. You're perfectly wrong. And because you don't know which one it is, you can never trust any of it. So then just don't use it. There's no signal. If you can't determine whether this is a buy or a sell, and it could be either, flip a coin, you're wasting your time.
Yeah, I like that. And I just want to touch really quickly on Wrapped Bitcoin or WBTC. I think we're going to hear about this more and more due to Trump doing that. Like, I'm a strong believer, and maybe it's right or wrong, but unless Bitcoin is in self-custody and an air gap wallet, it's protected, it's not your Bitcoin. Like, unless you hold the keys, I don't think you hold Bitcoin. I think you've got an IOU or access to Bitcoin, but I don't think it's your Bitcoin. Full stop. That's my belief, and that's what I'm sticking to. So when we start to hear about like wrapped Bitcoin, or I'm sure like Bitcoin on other blockchains, on altcoin networks, whether it's Solana or Ethereum or Binance or whatever it is, whatever the other ones are, like, what are your thoughts in regards to that? And is it a good thing, a bad thing, a distraction? It doesn't matter. Like, how do you think about alternative Bitcoin?
No, it's a good question. I agree with you. I think that unless you have the keys, it's obviously not your Bitcoin. And that's just reality. I haven't actually followed the story. I know that WBTC specifically just had a change of custodian. I don't know the flavor of that, but from memory, it wasn't a good result. I can't remember who the other buyer was, but for me, it's just not my thing, right? If you want to go and buy WBTC and speculate on something else, it may hold the price peg, but we've seen these things blow up all the time. I mean, really, at the end of the day, the only pegged assets that have really held themselves is Tether, right? Even USDC had that period where it's depegged because it had
that's right,
uninsured money in a failing bank, and even Tether, these pegged assets, they have the same risks of the custodian. And go back to 2022, there was a bunch of custodians that were playing silly games with their custody accounts, and they turned out to be short on the asset. Like, there's just so many things. We saw actually the other day, I don't know the details of this thing, but there was like Thor Chain, one of these DeFi things, and basically their business model was shorting Bitcoin, and they're now insolvent.
Great idea.
I mean, who could have seen this coming? So look, for me personally,
crypto bros.
And I wrote a piece on this called the flip flopping, and I used Ethereum as the punching bag, but it really applies to the whole crypto world.
Yeah,
it was basically my journey because I've used all this stuff. I've gone through the process of experiencing DeFi and all those things. And my biggest takeaway, aside from the structural technological problems that these chains have, I actually don't need these products. I just realized I actually don't need them at all. I need a DeFi platform where I can trade shitcoin A for shitcoin B for wrapped Bitcoin about as much as I need my fridge ordering milk. I don't need any of this stuff. I don't need the products. So I'm like, I'm going to assume I'm probably not alone in this. And then you see user numbers that just don't grow in this stuff, right? There's like 50,000 people who use this stuff at all in the world of 8 billion. Sorry, guys. Product market fit is Bitcoin and stable coins. That's kind of it. Just doesn't faze me at all.
Yeah, I like that. And I think that's a good area. Like, the way I see it is Bitcoin's money. That's the revolution. We're here for sound money, for freedom, for sovereignty, to be able to protect against deflation and not deflation, to have a deflationary money, to protect against inflation, and just be okay as money becomes worth less and less because they're going to continue to keep printing. But I guess like that's my message. What would be your message for everyone? Where, the first month of the year's gone by. People think this is going to be like the biggest bull run ever. Some people are talking about 500,000, a million Bitcoin. You're talking about like 120 to 150 would sort of be fair. But what can someone take away from this conversation that may just allow them to get through like the next 6 to 12, 18 months?
Always just ask the next question. If someone says 500,000 Bitcoin, how? How? What does that look like? Think about that for a second. Just like a very simple check. What is the Bitcoin market cap at that level? How big does it need to be? Um, Generally speaking, you need about somewhere between 2 and 5x, right? So if you have $1 come into Bitcoin, you get about a $5 to $3 to $5 change in the market cap. So if you're going to go up to a $500,000 price, look at the market cap, and then just divide that number, the delta from where we are to now, divide it by like 3 or 5, something like that. That's how much dollars need to come in, right? And you'll probably find that it's something on the order of several trillion dollars.
Yeah.
Then look at how big the ETFs are. They've taken in 40 billion, right? 0.04 trillion. If you need to get 10 trillion of capital to come in, and you have the ETFs are 0.04 billion, you need the ETFs times like 80, maybe.
Wow.
But that's not going to happen tomorrow, guys. So just always ask that next question. Engagement farming is really cheap. It's really easy to do. But just ask yourself the next question. Bitcoin's a big boy now, right? It's going to take a lot more and it's going to be a little slower. It doesn't mean it's not going to move higher. It is going to move higher. It is designed to move higher. The problem is it's just going to take longer. It's going to be choppier. It's not going to be as smooth sailing. The 100x returns we've got in previous cycles, they may still happen over the course of our lifetime. They're probably not going to happen in 2025. So just keep those things in mind, right? Always ask that next question of how or why, whatever it is, just go that next step beyond the headline. Oh, exchange balances are declining. Why? Oh, it turns out they're not declining at all because it's fucking ETFs. So, just ask that next question and you'll be so much further ahead because most people look at the headline, they go, yay, and that's it. That's the end of it.
Dude, I absolutely love that. Ask the next question. And, like last year, I went live 5 days a week with the news and looking at the headlines and stuff. And it was really amazing. It was a platform to remind myself to buy, stack, and chill, and for other people. But what you just said then resonates so much is ask the next question. That's why I'm going deeper back into these conversations and not just sort of that surface level, but what's actually going on, or how can we strategies, mindsets, or things like your charts and stuff to be able to approach this in a more focused, clear way. But I absolutely love who you are as a person, what you're doing. I'll put all your links below for everyone. I encourage everyone, follow James or Checkmate on X and check out his website as well. But thanks very much for joining us today, mate.
Thanks, mate. And I think that the last thing I'll leave you with was a lesson I learned from my market mentor. And that is the only thing you can control is your decisions in markets. You can't do anything else. You can't change the tide. You can't change where the market wants to go. It's going to go up, down, left, right, and center. All you can do is control what you are going to do if it does those things. So don't worry about trying to predict the future. Just focus on what you are going to do if it happens.